so I think we are live now. Great. Okay. Hello, everybody. Thank you for joining us today for this fireside chat. And my name is Modupe Odile. Everybody calls me Mo. I'm a partner at Vasiligo, and Vasiligo is basically focused on innovation-driven enterprises on the continent. We provide legal services strictly to the technology industry, and we've been doing this for 2 years now. So my background is being a corporate lawyer in Nigeria before I moved to the US, and then went back to law school in the US, and then started Vasiligo 2 years after I was done. So it's great to have everybody on here. One of the things I get really excited about with this panel is that, I mean, with this particular program, is that every year we have very interesting people come on. So when I saw this particular panel, I was really excited to talk to everybody on here because I think, really interesting discussions. So, I mean, if we could just go around the room, now the virtual room, right? And just do quick introductions before we go into, the panel proper, that would be great. Sharon, do you want to start?
Sure, happy to. So I'm Sharon Kinyanjui. I lead Africa for World Remit. So for those who are probably a bit less familiar with World Remit, we're basically the leading digital remittance company headquartered in the UK, but operate globally. So we send funds and money from about 53 plus countries, predominantly north to south. Here we're talking countries as far out as Australia, all of the US, Europe, to 147 receive countries, of which about 42 are within the African context. So Africa is pretty big for us. And really excited to be able to be here to talk about, the Pan-African possibility.
Okay, great. Thank you so much, Sharon. Dari, do you want to go next, please?
Yes, thank you, Mo. My name is Dare Okuju. I'm the founder and CEO of MFS Africa. We are basically the largest, I could say, network of networks, digital networks, powering cross-border, cross-network interoperability across the continent. Sharon and World Remit is one of our key big clients. But so we have a number of mobile networks, mobile money platforms, from M-Pesa in Kenya all the way to MTN Mobile Money in Liberia, who rely on our services to enable their users to send money to each other within Africa, but also to receive money from abroad, like Sharon was saying, from the UK, pretty much every destination of number of money transfer operators. I'm myself based in Johannesburg.
Great, awesome. Nice to meet you, Dari. And then James.
Hi everyone. My name is James Mwangi. I am co-founder and executive director of the Dalberg Group. We are a collection of businesses anchored around our strategy consulting firm, but ranging on everything from human-centered design, data analytics, implementation, and media. Started about 18 years ago, focused on promoting inclusive and sustainable prosperity around the world. Have found, while we started in New York, have really found our biggest base here in Africa. I am based in Kenya, but currently in Kigali, actually, which is one of our fastest growing hubs. From where we operate, we have 13 offices across Africa, employing about 250 or so odd people across our various businesses, but really spending quite a bit of time on how do you create those markets of the future that actually combine inclusivity with a degree of growth and transformation that the continent needs. And of course, with a particular eye on the digital transformation of the continent in various ways.
Okay, great. Thank you so much, James. So you know what, I'm just gonna start from you, right? Right into the questions. So the first question I have for you is just basically from your introduction, right? So how would you address the impact that mobile money has made in terms of the digital transformation on the continent itself? Like, if you were going to give a quick summary of how mobile money has helped digital transformation on the continent, how would you summarize that?
Well, that's one of those questions that's impossible to answer well because there are 50-something odd answers to a very simple question because the continent has varied widely. But I think in the variety itself, you can see some of the power of mobile money. Of course, when people think of mobile money, the first place or the big story in Africa was originally M-Pesa. And I think that journey has been interesting for me because for a while it was, why is mobile money working only in Kenya and nowhere else, was the argument, even as folks like Dario were working very hard to, in both his previous guys and in his current guys, to build it out across the continent, which of course turned out to just be a question of timing. And the second question was, well, is there any other innovation? We just, every year we talk about what's happening that's interesting in this Kenyan ecosystem. People say M-Pesa, M-Pesa, M-Pesa. We're tired of M-Pesa. And I think over the last 3 or 4 years, you're starting to see, I think we hit both a second wave, and I think we're now heading into a third wave of the transformation that mobile money brings, which is it's one layer of or one component of a stack of enablers who are truly digitally. And you can see it in other countries beginning to get more and more people onto mobile money and hitting that critical mass. And you can see in the first country to hit critical mass, just the sheer number and density of applications that now use mobile money, right? The entire phenomenon of Silicon Savannah, I would argue, is largely because Kenya was the first African country to have a large density of average consumers who could pay for goods virtually. There are other things that you still need. You need the ability to, you need better systems of identity. You need better systems of asset registry, addressing, and so on. But that's a critical enabler. The ability to pay virtually is the ticket into the 21st century. And it's an urgent, almost basic right that we need to extend to Africans if we're to have any hope of being competitive in this current economy, or of being truly inclusive, because the transaction costs of reaching everyone with paper money just don't make sense.
Okay, thank you. Dara, I'm going to throw the same question to you, right? In your own opinion, how have you seen that contribution, of mobile money to digital transformation on the continent? And, of course, you can speak specifically to your own experience and how it has played out in your own space.
Yeah, absolutely. And I think I agree with what James said, that indeed I will even go as far as saying mobile money is the most visible manifestation of digitalization in Africa over the last 10 years. And the numbers are simply staggering. I mean, roughly there is about 1 billion or so registered mobile money users. Half of those are in sub-Saharan Africa. Now, the story that we don't tell enough is the one of mobile money agents, which is really, if you look at the different layers that we need for that digitalization, the very first layer is digitalization of the money itself. And that is by and large still happening at what they call cash in, cash out agents or mobile money agents. And we are talking over 3 million of those across sub-Saharan Africa. So those are, you can see them as SMEs that are really, really at the core, at the foundation of the digitalization. Once you have that layer, then you have the 500 million or so mobile money accounts, registered account. And as James said, that becomes 500 million people that you can tap into, that you can reach and sell and sell or buy things from virtually. But what is important, and we start seeing, and that's a lot of the work that we do at MFS Africa is focused, is to recognize that for this to be really powerful, you need to be able to reach all these 500 million people and not to look at them in pockets of, how many of those are in Zambia, how many of those are in Malawi, how many of those are in Benin, and so on and so forth. And that's really our idea to say, like, look, the reason why we made so much progress in telecom and mobile drove so much is because we never decided that if you are in Benin, you can only call Benin and you cannot call Nigeria. Or you can call Nigeria, but you cannot call Niger. Or, if you call Niger, you cannot call Airtel, you cannot call Orange. Because by design, we have connected the mobile users directly to the world and to Africa and create one market from that perspective. And I think we need to arrive at the same position when it comes to mobile money to really unleash the potential. Then we're talking about one market. And as usually joke, most people think Africa is a country. We might as well not disappoint them. Let's just make it one.
I like that.
Yeah, okay. So Sharon, I have a slightly different question for you. So now we're going to focus on challenges, right? And I think that's also one critical thing that we're always constantly talking about. So we've seen the growth, we understand the innovation that has taken place, but along the line, so many things have actually been stumbling blocks to mobile money operations in the continent. And again, I say the continent as just like James mentioned, I understand the fact that there's so many countries, different countries have their different peculiarities. But generally, there's this thing about Africa not being connected enough, right? Interconnected enough, if I would say. So in your experience, what have been those challenges operating across the continent?
Thanks. I think some of them have been touched by slightly by James and also by Barry. I think, because Africa is such a collection of so many different markets at different stages of the mobile money journey, it makes it very difficult to say there's one experience. Within World Remit, actually, we are connected to over 39 different mobile operators in over 29 different markets, touching about 200 million people. So you can imagine the scale of the business and what we're trying to do. And some of those markets are probably more well established and have the success stories that James was referring to in East Africa, where mobile money has a very strong ecosystem. But then there are also nascent markets, right? So, we're more recently connected to Inui in Morocco. So the experience of what people are feeling or how they experience mobile money in Morocco is very different from the ecosystem that they would experience in Kenya, where you have, you can pay for everything from life insurance to, to your milk through mobile money, so everybody's at different stages. And I think with that, one of the key challenges we found as well is one is, of course, interoperability, and having that connection all across Africa. That's definitely one of the challenges. But the other challenge that we've also found is that in a business like ours, where you're focused on digital growth, it's how do you keep up with the pace of the market, right? Things are moving really, really fast. And everybody, every country is almost like a priority. How do you make sure that you're connected to all the different markets, right? And I think one of the ways that we found is actually to overcome some of these barriers in terms of the pace of the market has been partnership. Darius mentioned it. In many of the markets that we work directly with the MNOs, the mobile network operators themselves, but you can't be everywhere at the same time. And so what has really helped fuel our growth has also been taking into consideration that you have to have partners. So recognizing legitimate, great agri-payments, aggregators like MFS, etc., who would enable us to connect, because one of the greatest challenges I think that there is that it takes a lot of technical resource to connect with a lot of the mobile network operators directly. I think it's one of the areas that perhaps is less talked about. Maybe we sometimes focus on the sexier part of we're live and it's excellent, but anybody who's in the fintech business knows that it's a lot of effort, right? And somebody has to put into place the tech resources to be able to build the rails. So I think that's one of the key challenges. But likewise, I think the opportunity is actually to overcome those challenges is partnership.
Okay, thank you so much, Sharon. Just following from what you said. So James, I have a question for you around. So now we've talked about the challenges, right? And this particular fireside chat is supposed to talk about interconnectedness, but looking at, but one of the things I also want to touch on is this even possible, or is it a myth? Is it actually going to be possible for us to get to a point where we have, mobile money on the continent as in one, like something that we have a continent. Let me phrase my question in a bit of an experience, right? So 2 years ago or so, I was in Ghana, and then I needed to pay for an event and stuff like that, and I just couldn't do it. And people were telling me how I needed to get mobile money. Mobile money was very big in Ghana at the time, not so much in Nigeria. And then it was just impossible for me to be able to make any transfers. At the end of the day, it had to be a cash transaction, and then somebody else used their mobile money account to make that payment for me. And I just kept thinking, I was like, is there going to be a time where I could just walk into, like with my Nigerian phone, walk into Ghana, and then I wouldn't have any challenges, you know, using mobile money? Is that something that is even possible? Because a lot of people on the continent have the opinion that we're going to get there someday. But I want us to talk about it. Is it something that is even possible, do you think?
Well, I am, you know, if you look at the patterns, both in the past and looking ahead, it is not only possible, it is inevitable. In part because the reality is markets derive their value from their scale, right? And scale can come up from two things. You can have a constant number of nodes in the market, but each node is worth more. So each person on your network has more money. Or you can have lots of people with very little money on your network, but there's a whole lot of them. I'll let you guess which one makes most sense to aim for if you're trying to build anything of scale, you know, any truly scalable business in Africa. Is we will have to first connect as many Africans as possible in order for one, to tap the distributed resources in the population, and then two, to grow that. Now, I think there are barriers. I think we're still in a round of the fintech game where after the first shock, everyone is chasing the obvious immediate first order price, which is, can I be the one charging a little tax on every transaction, every time money is moving? And so you have lots of people fighting over who will own this group of customers versus that. The problem is that's a fixed pool, scarcity-oriented mode of thinking. The real value pools of the future are not going to sit. You know, American Express or MasterCard are big companies, but they are not the biggest companies in their ecosystems. There's a whole set of additional services and new pools of value that should ride on those rails once you get the markets to be big enough. So I think inevitably people are already thinking like that. But I also think that even, you know, the big barrier to that is regulatory resistance, you know, getting the MNOs and the banks to kind of align. But as we saw with M-Pesa as the first one of these itself, that only works for so long, right? For a while, people start sending each other airtime and essentially using it as currency. And then there's a regulatory gap somewhere and something takes off. And I think inevitably, you're going to see innovations that begin to break down those walls between the systems anyway. And the minute that one of them begins to gain momentum, the logic will become clear. So who is it? I'm not in the business of being a prophet, so I'm not going to say it's going to be this player or that, but someone is going to crack the wall because the sheer value available from cracking that wall, whether it's via an OTT platform on a phone or some, you know, mechanism connecting various MNOs, someone is going to crack it. And it's such an obvious key anchor of getting Africa to any sort of economic significance that I would say I will be shocked if it hasn't happened over the next 2 or 3 years.
So if I can add to that more.
So Dari, I was going to ask you, because I mean, you are in 36 countries, right, on the continent.
Yeah.
So have you broken through the wall, will you say?
I think so. I mean, there are many walls, right? And you have to see this a little bit like water moving. So you go for the path of least resistance. So for many people in my you know, hometown Benin, this is actually pretty everyday life. You know, if you need to make a payment to someone in Niger or Cote d'Ivoire or Togo next door, you use mobile money, and all of that is facilitated by MFS Africa. You go to East Africa today between Rwanda and Kenya and Rwanda, Uganda, Tanzania, Burundi, and so on and so forth. So we are facilitating. I mean, we process close to $70 million in September of these type of transactions. A lot of them small transactions, less than $50. Most transactions will be. So it's already a reality in many places. Now, let me tell you the reason why I believe that, you know, obviously I believe MFS Africa will crack it, but I believe that it will be cracked anyway, is what happened when we opened what we call a new corridor. So when we opened from Cote d'Ivoire to Niger, for instance, guess what people were asking? Why Ghana is not possible? And actually, customer cannot understand why you will actually be selective. Why, if they call Ghana, it will work. But if they try to send money to Ghana, it won't work. If they WhatsApp Ghana, it works. if they're video call. So there is that thing of the consumer mind, and we're talking about a generation, a population, mostly young, 25 years of age or less, completely digital connected, who is looking at this and say it doesn't make sense. They don't see borders, right? They just see lines, and they can call across the line, so they want to make those transfers. I'll tell you where we're still having a little bit of a problem. It really has to do with regulation and policymakers. The only reason why from Benin you can send money to Togo but not to Nigeria, with, by the way, you have more economical ties with, there's more, and we're not even talking about trade yet, is because one is CFA and the other one is Naira, right? And we are still seeing this as huge walls between the two countries. Same reason why Togo can send to Benin and not to Ghana. Same reason why Cote d'Ivoire will be able to send to Senegal but not to Guinea, not to Liberia. Again, if you look at trades, it's moving more in those regions than it is moving in what is possible. And I have hope on two points here. One is obviously the consumer, as I mentioned. People are trading in the region, and there is, Nigeria, of the $25 billion that Nigeria gets every year, there is about 2.5 billion that comes from Cameroon alone. We don't usually talk about that. We thinking about the UK to Africa, and there's about 600 million that comes from Benin, 300 million that comes from Niger, similar number coming from Chad. So there is that pressure of the people and the trade, and the water needs to keep moving. The other thing is the recognition around this free trade area that we're looking at, that, and I think really, let me call it, small countries get a chance, because we have to, if we really are able to connect the mobile money platform or the digital payment platforms in a seamless network, we merge markets. That's what we do. And here, obviously, people like World Remit are already taking advantage of the work that we're doing. But I'm thinking really about the small and medium businesses, the kids that come up with a great business in Liberia. Between you and me, Liberia is a subscale market, despite what Liberian thinks. No offense. Benin is the same. It's a subscale market. But if you are able to merge this market and create this network that allows you to trade freely from Liberia with the rest of the continent, you just connected Liberia into a bigger market. So I think when we talk about the African trade, the free trade, the mind goes straight to the bridges and the roads and the railroads. Those are important. But policymakers have a big role to play here to also connect digital platforms. And I can tell you, it will take us less than an hour to enable Benin to Ghana and Benin to Cote d'Ivoire. To Benin to Nigeria. Less than an hour, technically. But it will probably take a whole lot more time to discuss at policy level to do this. But we will get there. I'm absolutely positive that we will get there.
Okay. So my next question is on something that, at least two people on here have talked about, which is regulation, right? So we recognize the fact that, and Sharon, I think I would like you to start with this question. So we recognize the fact that, mobile money is basically the first step to financial inclusion on the continent. And regulation has to happen, right? But there's a resistance, as we know. There's this tension between looking at the regulatory, looking at the regulations as banking regulations. There's been a lot of resistance from both sides, and that communication is not happening as it should in many places. So what would you say is the best way for us to, on the fintech side, to engage regulators better? Because we can't do this without them, right?
100%. It's definitely, and I think that's I think that's the first step, right? Anybody who's actually in the financial services space, the first thing we always accept is the fact that the industry has to be regulated, right? You're dealing with people's monies. Regulation is an inevitable part of the cycle, right? You need to be regulated. We all accept that. I think, but I think it's finding that fine balance between regulation and innovation, right? And I think that's where we've always there's always been that tension that you speak of. I mean, at World Remit, we cash out, our customers are able to cash out in a variety of different ways. So we've seen regulation happen across the board. So our customers are able to terminate to mobile wallets. They're able to terminate to bank account transfers. They're able to collect cash. There's still people who want to have cash, so cash also still has a part to play in this ecosystem, yeah? And so the regulator, when they're looking at the whole picture, they're coming to it with a different lens, I would like to say, but I think the area that we're sometimes challenged on is, how regulation doesn't necessarily keep pace with the state of innovation, right? So if you look at something out of those three that I mentioned, there's probably, the one that is the fastest growing, has a lot of innovation happening around it, is maybe more mobile money, right? But when the regulator is looking at the laws, or some of the laws that are already in place around licensing, they also take into consideration that there's cash payout, for instance. So sometimes you find that the regulation is not keeping up with what is happening, right, in the market. So I think it's definitely a challenge. I think the onus is on us as well as the industry, effectively, to take regulators with us down that journey. I'll give an example. We send out of South Africa. SARB is, as many people would know, is one of the toughest regulators on the continent, and it was no mean feat to be able to be licensed out of South Africa. But there were certain things we were bringing the regulator on the journey with us on, right? EKYC is not regularly practiced here. When people talk about KYC, they're talking about some of those shops that Dari was speaking to, which is you go, you hand over your ID over the counter, and that's how KYC has traditionally been done, right? But with digital platforms like Remit, that's not what the business is built on. It's built on innovative technology, cloud technology, eKYC. How do we take regulators with us on this journey and make sure that they understand what is required? And I think the other challenge that we've had is, I think consolidation as an industry. It's funny enough, I was talking to somebody and saying, and they were telling me that the betting bodies actually come together as the betting bodies across Africa to lobby, right? And therefore they manage to get presence, etc. So we're not in betting. I'll say that now, but I think that's one of the lessons that we can definitely learn, which is that we really need to come together as an industry, and that makes it a lot easier for us to then go to the regulator with propositions that matter. It's if you have, let's say, an Africa, I know there's an Africa Fintech Association, but let's just assume that there was one that was dedicated to payments, an Africa payments body. Then we could easily go to those markets that Dari and James have mentioned to be able to say, hey guys, why are we trying to create regulation that is already existent in certain countries? A classic example is where James is. Bank of Kigali has been very progressive in terms of some of the regulations. So why reinvent the wheel? Why not say what they've done in certain areas are certain things that we want to come and bring across to other East African markets, or to take it across to West Africa? So I feel like the part of it, we can sit and look at regulators, but I think better than that, we can actually try and create a cohesive body as the industry to be able to go to regulators and help them understand what we see in different markets. Yeah.
Okay, thank you. That's interesting. I like that idea. James, what do you think about this? Creating a body, in the industry. I feel like we have a lot of talk. I mean, we have a lot of panel discussions. We meet each other in different conferences, but I'm not really sure of a body that has been instituted for the purpose of engaging regulators across the continent. What do you think about that idea?
I think it's a good idea. I think part of the reason it doesn't happen is a fundamental one, which is that everyone is still trying to eat each other's small lunch instead of chase a bigger pie. And we've seen this whether we were looking at some work we did looking at the future of mobile money in Nigeria, or in a range of countries. There's a lot of lobbying, and often the key players in this space will each have great connection to their individual regulators. And I think what's lacking is a common agenda. Access is not lacking. What's happening is that the regulators are stuck where they are because people are pulling in different directions, which ties to my earlier point around the fact that I wouldn't say everyone. I would say that there's still a critical mass of commercial players across the continent who are more focused on protecting their current pool than thinking about what they could do with a bigger pool. And that creates that other force on the other side. So I do think engaging regulators is going to be important. I think that moves like the AFCTA and looking at what the regional commissions are also trying to do, I think there is an agenda there that we can plug into. But I think the hard question players in the industry need to ask themselves is, are we all on the same page in terms of seeing interoperability as an unalloyed good? And if not, can we figure out those who don't want it and put them on one side and those who do want it on the other? And then move on. Because right now we claim to be an industry, but actually there are really divergent interests depending on who's speaking at any given time. And that's the reason why we're not making progress. Not that people don't know how to lobby as a bloc or that the regulators don't know how to engage. It's that they're being pulled in different directions by different interests.
Can I offer a different view here, Mo? Can you guys hear me?
We can hear you.
Okay. Yeah. So I mean, I agree, but so I think we have to take the discussion to the regulators as well. And when I say regulators, sometimes it's too easy to hide behind the institutions that you work for. And this is not true for regulators. It's true for all of us. I work for this big company, and I talk about us as this big company, and I remove my own responsibility from it. So I think we have seen a big change on who is a regulator in Africa right now. I think we belong to a generation where we have high professional people. And I want to take the question to them individually. What is going to be their contribution to prosperity in Africa? And I think part of it, I see regulators as really, I believe access to financial service is a fundamental human right. And I believe it's part of the mandate of the regulator as well. And the other part of the regulator is protection. But protection of who? Of the most vulnerable user. That for me is part of it. And too often regulators are protecting governments. Regulators are protecting private small interests. And then we have to have the courage to have honest discussion. And I believe that the professionals working in those, I'm not going to talk about regulators as one big body, but individuals who have the responsibility to craft this policy and to enforce it have to keep both in mind. Access is a fundamental human being, and the job of the regulator is to protect the most vulnerable users, not small interest group. And I think when we are open to that conversation, we will be able to move stuff. So yes, the industry has a role to play, but we must not absolve people working for this regulator for their own personal responsibility, for their contribution to prosperity in Africa.
Okay, thank you, Derek. I mean, this question, I just came up from something you just mentioned. So if a regulator, for instance, wants to make good, I will use to protect. Did you hear my question?
No, sorry, it broke up.
Oh, okay. So I was saying that, if a particular regulator wants to make good its obligation to protect the most, the most vulnerable user, who exactly do they engage? Do they engage the industry players, like you, or do they, do they engage the public? How exactly does that conversation happen? Because it's something I've heard so many people say, that conversation even starts.
Are you asking me? Yeah. No, yes. I think. Yes, thank you. Yeah. I think indeed, private sector engagement has to be part of it. And I would say pretty much every serious responsible player has some sort of regulatory engagement part of their business. Compliance, risk management, and regulatory engagement is there. So I do think that, and yes, the private sector has to be part of it, but it has to also be. I think there are companies. People like James and Dalberg are doing good work that could be seen a little bit more independent than what private, pure private players like us, who might be perceived as biased or with our own narrow interest. But I do think there is no lack of people to engage to understand what the most vulnerable user needs. What is needed is to bring that to the fore. is that that becomes central in how we're thinking about it. You know, if you take your car, drive from Lagos to Accra, you know you can do that in a day. You'll cross two borders, the Nigeria to Benin, Benin Togo, and Togo to Ghana, actually three borders. And look at people who are trading along those lines. Those are the people that the current regulation is hurting. That's what I'm talking about, the most vulnerable people, because they have no other choice than to either carry the money, find all sort of risky ways to make payment of the trade that they're doing. The same is true if you from Mombasa to Juba, you know, from Dar es Salaam port, trying, you know, all the way to Zambia. So between Zambia, between Lusaka and Lubumbashi in DRC, those are really busy trade roads. And the most vulnerable people that I'm talking about are every day on those roads, and they need to come to the fore when regulators or policymakers are deciding about what can we and can we not do when it comes to cross-border payments.
Okay, thank you so much. I'm going to take one question, well, two questions we have of the Q&A. So the first one says, okay, let me take the other one. So it says, why does the discussion on fintech focus heavily on payment services, whereas there are other business models of fintech already in operation in Africa? Who wants to take that one? Sharon, do you want to take that?
Yeah, sure. I think there's ultimately whatever type of business that you're solving for, there has to be an element of payment, right, for it to be successful. So I think part of the reason why there's always a discussion around payments is it's a foundation, right? If I was selling, I don't know, I want to sell beans, or even that same analogy that Dario was giving us about, you know, people wanting financial access, you know, all people within the population wanting financial access. The reality is those people are trading, those people need to be able to have the right payment structure. And that's why I think payments always has to be, the payment has to be right for everything else to follow, right? And I think that's even what M-Pesa has shown us, right? They showed us that if you build the infrastructure, you start off with the basic Ussd, I can receive my cash, everything else follows. You then now can do your savings, your loans, your all other products have now evolved as a consequence of making sure that the payment infrastructure was right. So I think it will always forever remain there. And I think also the second part to that is that, let's be real about it, you know, we do cross-border payments, but a large untapped market is actually payments across Africa. Yeah, and until we solve for that and we make it more cost affordable, I mean, that's another element that is often discussed. I mean, I think quite often, I think I saw a World Bank study last week which said that the cost of global remittances, let's say, into Africa fell from 8.7% to I think 8.5%, which is good during this COVID pandemic period. But then nobody really addresses the fact that it's still really expensive to send intra-Africa, right? And that's why people are carrying cash on them. So I feel like we are not far advanced enough with the discussions on payments to start discussing what do we do on the back. If we can solve that issue where the person who is selling, I don't know, this necklace in Rwanda can get instantly paid, then we can then we will build the infrastructure to allow us to be able to have that, to have the intra-Africa, Pan-African e-commerce system, to have insurance across Africa, there'll be so many other things that will come to life if we can solve for payments. So I think it'll be at the heart of our discussion until we solve for it.
Okay. Thank you, Sharon. So there's an interesting question here, which I think we can end with. So this is Judd's question, and it says, so James, I don't know if you want to take a stab at this. So he's saying, when is Africa moving away from Ussd? There are tech stacks such as open banking now in practice.
When the majority of Africans no longer rely on USSD. I mean, you know, we can build stuff, and I think we should. I do think, and I think Sharon makes a good point. We need to be clear about what are the critical enablers of different steps, but that doesn't prevent us from building for the future. And so some people are trying to solve the payments challenge. I think there's huge opportunities in a whole range of business models that depend on the payments challenge being solved. That doesn't mean we must all work on payments and then shift to the other thing. It does mean that we all depend on getting payments right before we can move forward. I think similarly, USSD will fade away because phones break and they get lost and you replace them, or new buyers come along, and the proportion of true smartphones in the population is growing. But the reality is, for now, the majority of our population is still on USSD, and you meet the market where the market is, and you innovate for that. I do think that there is an intermediate challenge of, what can we do that creates more and more non-USSD functionality with USSD, which people have been working on for years, and I think that should continue. Recognizing that on some day in the future, just as we don't have modems on our computers anymore, USSD will fall away, but that's a function of time and longevity of technology. I'm sure Dario would have a view as well.
Yeah, I want to caution us again we sometimes too ashamed of ourselves. I'll tell you what is great about USSD. USSD session needs to be open for 45 seconds if you want the service to work. And that has forced some really great backend developments on the continent, that people have been able to build services that will adapt to that. And those services will be first class anywhere else in the world. I mean, we are still, in Africa, nobody think about any other form of payment than instant payment. I mean, in the US, they're still doing checks. Most countries, you send money and you're waiting for, some TT message, Swift, whatnot. It takes 2 days and now you can start. So yes, USSD can be a little bit inconvenient if you're coming with your iOS. But number one, most people are not using iOS. So, where is the market? And number two, it is forcing us to create some really great innovations that I believe will be able to be exported, and is already being exported around the world. So I like USSD.
Yeah, I like USSD too. So, I said I was going to be the last question, but speaking about meeting the market where the market is, just as James said, I would like, this final question for everyone to just go around. We've seen situations where mobile money has taken roots in some markets on the continent and has touched on the continent. And this is like the big elephant in the room. So, I mean, in your experience, what do you think are the similarities between the markets where mobile money has actually taken roots and the similarities and the differences with markets where mobile money has taken roots and where mobile money hasn't? I mean, we might not be able to exhaust that conversation here, but I just want to know if, personally, anecdotally, you've seen something and you're like, oh, you know what, this is why it worked here and this is why it didn't work here. So anyone could take that question.
Maybe I'll jump in.
Sure.
I think when I think of the question that you raised, I think two things come to mind: culture and regulation. Yeah, culture, because I also feel that maybe what makes mobile money ubiquitous or drives the growth is also culture, the culture of the people, how entrepreneurial they are. There's always that famous story that actually, when people invented, when M-Pesa was invented, it was not for the use. It's people who found their own use for it, right? It was not Safaricom that came and said, "Hey, everybody, this is how you're going to be able to use M-Pesa." It's people's own usage that actually created that, and I feel that's a big part of the culture, and a big part of where the innovation will come is that if you build the platform, people will decide to use it how they will, right? And I think that's also what happens in many markets. I mean, I've been to Uganda where people are sending cross-border payments before all of this, before M-Pesa Global and the likes. People were sending money from Uganda to Kenya, and that's because everybody on either side had M-Pesa, right? And so they were figuring out different ways to be creative. Let's just put it that way. So I think culture is definitely there, and then also let's also discuss regulation. I think we kind of briefly touched on it. I mean, in some markets where, let's say, the innovation has been bank-led, like Nigeria, it's a very different mobile money experience to where it has been telco-led, right? So we can see those differences between the two. So where regulation is different, or probably favors one ecosystem rather than the other, then it probably has not advanced in the way that it has in other markets. So for me, I would say, I guess in parting, it really is about, in my view, culture and regulation.
Okay. James, what do you think?
So I think Sharon nailed it. There was a cottage industry around 2013 to 2016 or so for firms like mine, where we were asked to again and again answer this question of why had it only worked in this one country, then these two countries, then these three countries. And the list kept on growing. And of course, the elaborate reasons why those countries were similar and these other countries were different, at some point, you just have to say, getting any market going in any one place is a confluence of many complex factors that I think Sharon did a good job of outlining, and I won't try to recap. And it just sometimes takes time for all of those things to align. And you can see a country, it doesn't mean that because one country has 5 of the 6 criteria in place and only 1 missing, that it will happen faster than a place where none of them were in place, because they could all come together at the same moment and suddenly the market clears. So it's been, if you'd asked me to guess which countries would take off and which ones wouldn't a few years ago, I would have gotten the answer wrong. And I don't know who would say that they would have nailed it, right? Because there's no more entrepreneurial folks than our Nigerian brothers and sisters. But I think the ecosystem could do a lot to improve, for example. The one thing I will say, though, is I do think that what drives the long-term impact of a system, I think I've seen 2 things that I'm kind of playing around with, and I'll put them out here as a provocation to end with. There are some use cases that, take off. People find use cases. And I think the closer those use cases are to generating value rather than just enabling consumption, the more likely a mobile money ecosystem is to get deeper and more robust and to drive other kinds of growth. So to what extent are you actually entering the productive sectors of the economy, be it agriculture, be it certain kinds of trade, and enabling them in the right way versus just being a point-to-point transfer? And in that instance, much as, for example, gambling and betting picked up a lot of hype for a while a few years ago, you're seeing now the consequence in that was a one and done. The money was remitted one way and it was out of the country in the next step. And I do think we need to pay more attention as we're thinking about what regulatory steps and what aspects of the market to enable. Where are those parts of the economy where mobile money can be a critical enabler of activity? So for the generation of wealth, not just the movement of funds. And that I think is where the opportunity will lie for longer term impact.
Yeah, I totally agree with you, because when you look at social selling in Nigeria, for instance, it's very big, and then people are selling on Instagram and other social networks, and you see that payments just takes roots because it's enabling a particular industry. So that's a very good use case. Thank you. And so Dario, I think we just want to know, what do you think?
I will agree. I will agree with both Sharon and James. In my experience, which is almost 15 years in this game now, there is a combination of 3 things you need to look at. One is distribution network, or the structure of the distribution market. Some, especially around the mobile distribution, because you need that agent element for mobile money, your ability to build that out in a truly ubiquitous manner is going to be fundamental. And it's easier done in some market than others, as we've seen. Nigeria is not the only one who kind of failed mobile money. South Africa failed mobile money too. And I will attribute that one to the structure of the distribution market. The second one is regulation, of course. I mean, everywhere, and there's this notion of proportionality in regulation, that where it has been done well. And proportionality simply says, I'm not going to treat a $20 account or a $20 transaction like a $2 million account, right? So where that has been done well, I think it gives a better chance to mobile money. The last but not least is the one that we'll be talking about, which is use cases, really. And I think, what I've seen is going in with too many use cases at the beginning make the level of complexity too high to be successful. Hence the payment layer, as Sharon said, hence the P2P, which sounds boring and simple, but it's actually a good foundation. It's like there's okay. Where we going now, and I think that's the next challenge, and that's certainly something that MFS Africa we are looking is, how do you put this network in the hands of the youth, innovative, digital-first SMEs, who will create new use cases like the one you're talking about? Like when I think about selling, I don't have to think about e-commerce as Jumia or Amazon. I can think of e-commerce completely differently, and payment becomes an element of that, and that creates a use case. I mean, we saw agriculture during this pandemic. We saw a huge in our network, a lot of agricultural related type of payments, because all of a sudden there was a huge movement to support farmers across Africa, and that creates some usage around that. Education, health. I think that now it's going to be about, just like the internet. You have the internet. So at the very basic is internet protocol, TCP/IP. But once that was there, then other things come. You couldn't have just looked at that and predicted Google or Facebook. But it was because that layer was there that all these things became possible. So I believe if we get it where we're getting it to, which is to have a reliable layers of payments, other use cases are going to come. And even market that are seen today as not so much mobile money, they will get some sort of digital payment. It might not be the one that we see in Kenya, but people will transact digitally across the continent. That's our conviction.
Okay, so thank you so much, Sharon, Daria, and James. We are, 12 minutes out of time. I really enjoyed talking to three of you. Thank you so much for taking the time. And yes, we'll definitely have this conversation and continue it some other time as well. Thank you so much.
Thank you.
Thank you.
Thank you.
Bye-bye.
Bye.
Bye.
Bye.